These are the first badges of principle that you must understand about group consolidation at this level. The other badges include when there is foreign subsidiary, and also when you are dealing with the issue in relation to a typical complex group structure where other statements will come. Because when you are dealing with foreign subsidiary, they will give you 3 exchange rates. I'll talk about it later on, but let me just give you an idea. You're suspecting that particular thing, right? So they will give you 3 exchange rates. Exchange rate at acquisition, exchange rate at the reporting date, year end, then they will give you the average, weighted average exchange rate. When you are preparing the statement of financial position, you will use the exchange rate at the reporting date to translate the financial statement of the subsidiary. But when you're preparing the income statement or profit or loss, you will use the weighted average exchange rate. So we will get there with those principles as well and talk about it.
You don't use the acquisition one at all.
The acquisition will be used in calculating goodwill. Good question. So you use that in calculating goodwill. Use this to when you are dealing with statement of profit, financial position, and then you use this when you are dealing with group statement of profit or loss. So that's the idea about that also. So let's crunch some numbers and let's see how we're gonna do about that. Okay, even before the numbers, let me just give you something. Before the numbers, let me give you a pro forma of how the profit or loss account is going to be looking like. For the balance sheet, we're not going to be working at a pro forma because we will be looking at it as and when we solve the question. So these are the 3 questions. I'm hoping that we'll be able to solve them through the period that we have left. So consolidated statement of profit or loss. So we bring the parent, we bring the subsidiary. If it is a foreign subsidiary there, then we bring the exchange rate in the middle. Then we bring adjustment here. Then we get a group. So parent, sub, exchange rate, any adjustment, you get a group. So what do we bring first? Sales or revenue. You bring the parent's revenue, bring the subsidiary's revenue. Remember I told you something, that when there is intra-group trading, the total revenue is deducted when you come to the P&L account. I don't know if you remember that from last week. So the adjustment will be the total intra-group trading. So you subtract it and that gives you what? The group figure. Subtract it, that gives you the group figure. That is the total sales. Then you come to cost of sales. With cost of sales, you're going to bring the parent. Remember that is a deduction. You bring the subsidiary, that is a deduction. Then you need to bring that adjustment. The intra-group trading, you have to subtract it from cost of sales, subtract it from revenue. Into way and again, but we bear poor, because this poor will reduce the negative. I hope you are getting the picture. Now, please, when you do this line, don't do the arithmetic and bring the figure here. Why? Because remember, we spoke about excess depreciation. So if there is any excess depreciation, it will be treated here. Must be deducted. If there is any provision for unrealized profit, it also must be what? Treated. Whoever is selling, either the parent or the subsidiary, okay? Whoever is selling. So I'm putting asterisk there, meaning not the two will be there, only one of them will be there in relation to that. So you then add everything here. You then add everything here at the cost of sales region. The net is what you bring here as what? Your cost of sales. Are you getting the picture? Inti, way now transfer that be, because all of these things are adjustment to the cost of sales. So you just list them down like this, then you just do the arithmetic for all of them. The net figure is what you bring under the group.
And which line should you write now?
Which line? Yeah, it could be on the last line. It could be on the last line. That is the last line for your, if it is PUP. Excess depreciation. So we get our gross profit here. After that, there could be distribution expenses. You bring parents, you bring the sub, we deduct, straight up. You could bring admin expenses, you deduct.
And this is simple method.
It's simple method. Okay.
I realized that my previous knowledge was full of. Sometimes you get to know whether you are deducting or you are adding.
Okay. Okay.
Yeah, but with this you will be able to know.
You'll be able to know what you are doing. That's true. Impairment, if there are any, we deduct and put it there. Please, even though I did this as a pro forma, note that you are going to be taking into consideration the period. I hope you know that. So if it is 6 months, you don't bring their whole sales here. You just take their percentage of the ownership. So we have the impairments. Bring our answer down. Investment income, if there is any in the question. That's an addition. And then maybe dividend received from the subsidiary or the associate will be brought. Then profit from associates will also be brought. Then, okay, I need to bring this there. So. Then this is profit before tax. As we move ahead and solve more complex questions, you realize that there may be adjustments to these things. There may be adjustments to these things. So please don't just be fixated on this side of the pro forma, because when we will get forward, especially, then the question we'll be solving next week on what we call merchant, the approach, something, there will be some adjustments here. So please just put that in your mind, and let's not just be fixated on this particular aspect of it. So profit before tax, okay, I have that there. Then you bring your tax, income tax, investment income. You bring your tax. Then you get a profit for the year, respectively. Where? Dividend from associate or subsidiary. Now my space is exhausted. The last line I'll add it here. Non-controlling interest. Now the way you get a non-controlling interest is to take their percentage of ownership and multiply it by the subsidiaries profit before for the year of the sum. And that will be in the second column. So please note that E is group. So that will be in the second column. You deduct it. So that should be here. And you deduct it from the group. You deduct it from the group figure here. So that whatever answer you get will be to controlling interest or to the parent company. To the parent company. This area is very important, and the question we are about to solve first, I'm going to deal with some of these issues there for you.